Today, my guest, Devin Elder, is on the show today to talk to us about multifamily investing in San Antonio, Texas. All that and more coming up.
Welcome to the Wealth Through Real Estate Investing Podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and to reach the lifestyle you always wanted. And now, your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing Show. This is your host, Dwaine Clarke, and today we have Devin Elder. Devin is the founder and CEO of DJE Texas Management Group, a vertically integrated multifamily investment firm based out in San Antonio, Texas. Devin is also the host of DJE Podcast. Devin, thank you so much for joining us on the show, and how you doing, my friend?
My pleasure, Dwaine. Doing well, thanks.
Absolutely. Really looking forward to it. As I kind of mentioned before we started recording, I love I love this podcast format. I'm able to talk to investors all over the country, and we talked to several investors in different parts of Texas, but not in particular San Antonio. So I would love to kind of learn more about that area, so people that are interested in investing there can be more informed and be able to make more wiser decisions. But before we get to that, would you mind kind of talk about your background in real estate and how you got started?
Yeah, sure. I had a pretty traditional path before real estate. I graduated college and then I went to the corporate world for about a decade doing operations and marketing for some large public companies. And then I found real estate. Really, I had decided I wanted to be an entrepreneur first. And then it took me a few years of looking at different options before I went to a real estate seminar and said, okay, this is it. I'd always kind of heard about real estate. It's hard to avoid if you're looking for ways to build passive income, ways to build financial freedom. Real estate shows up. It's kind of ubiquitous in that way. But yeah, it took going to a seminar, and again, I'd already decided I was going to make this shift away from the corporate world and be an entrepreneur, and real estate happened to be the vehicle that I chose for that. And so once I made that decision, I started out in the single family world. I did one project, and then 10, and then 100, and then along the way got into multifamily because you don't want 100 utility bills and 100 insurance policies, right? It's much easier to buy a 100-unit apartment complex and do it that way, and that business scales a little bit better. So that's what I've been working on the last few years is growing that business.
Awesome. Can you kind of talk to us about your company? Kind of like I know you invested in a whole bunch of deals, and you guys are kind of exclusively working in the Texas marketplace. Can you kind of talk about kind of your portfolio and kind of like how you guys built along the way?
Yeah, so we focus today in San Antonio, Texas, right in the middle of Texas. It's a market that's kind of under the radar next to Houston, Austin, Dallas. I mean, those markets get a lot of attention, and so San Antonio is a little bit slower of a market, and there's pros and cons to that, which we can dive into. I started out with a 6-unit and then a partnership on a 75-unit, and then I bought a 130-unit and a 128-unit and so on. Today we focus on really, I'm looking for that 250-unit apartment complex in San Antonio. In our own backyard, we have our own management company that we can put on it. The property we just closed last month was 256 units. So just right up the fairway for what we're looking for these days. And it's nothing too, I got buddies and all kind of different stuff in real estate. They're building hotels, and they're doing crazy opportunity zone stuff, and they're completely turning around properties. Multifamily real estate is actually pretty simple. You get agency-backed debt. It's a great debt product. You go in and try to incrementally improve net operating income. And it's almost kind of a simple business model compared to some other real estate models out there. So that's the goal for us, is just to continue buying a handful of deals like that per year if we can find them.
Yeah, it's really good that you mentioned investing in your backyard. Me being in Connecticut, which doesn't have kind of like the many faceted benefits of kind of like a landlord friendly state. Can you kind of talk about Texas overall, San Antonio, your specific market, as far as kind of like the many benefits that makes it a good investable state?
Right. So that's a great point you brought up about being landlord friendly. You want business friendly environments to invest in. You want it to be basically, at the end of the day, if somebody's not paying their rent, you want it to be easy to have them get out of your property or start paying rent. And in some markets, that's, it could take months and months and months, or you got to, pay for relocation costs, et cetera. And, we can argue the merits of those things, but as an investment, where we basically got, we're beholden to our stakeholders, to our investors. We need to hit certain metrics. It's a lot easier to do business in a landlord-friendly state that Texas is, right? You see that in different markets, but certainly we've got that going for us. And I wouldn't want to invest in this type of vehicle that we're in a market that wasn't landlord friendly, just because it would add so much complexity and cost to the business model. So that's it in a nutshell. You also want, I think, for a market that you're looking to invest in, you want it to be business friendly for job creation, right? Not just for you because you own a business. Owning an apartment complex is a business, but you want other businesses to be able to operate and thrive and hire folks, and you want to have a market that's got a lot of legs to the table of employment, right? You don't want one employer or one industry providing jobs to an entire marketplace. And the lenders will look at that too, right? They call them concentrations. Is there a concentration of employers, or is there one employer that's hiring everybody in the market? And if that employer goes under, it's going to really impact your occupancy. So you want a diverse job place, diverse workforce in terms of different industries that they're in, and that's going to help your occupancy in general as you operate these apartments.
Absolutely. And then kind of piggybacking off of that question, I know that the whole country's kind of trying to recover from, the pandemic, and kind of, see where like the next steps. Of course, like a lot of the states that kind of have, a little bit different restrictions, but then is kind of a focus of getting people back to work and things like that. What can you say, like, for the state of Texas, how you guys been doing as far as kind of like, getting things back to a more normal course, and how has that been affecting on investments?
Yeah, it's such a crazy year in 2020. Texas in general has been, again, fairly pro-business. I think Governor Abbott's done, kept that in mind throughout the 2020 pandemic. I think certainly better than some other governors have. So we're fortunate there. There's also a number of assistance programs for residents, right? I mean, in Bexar County, the county we operate most of our properties in, there was, I think, $30 million allocated to rent assistance just in the county, right? Then you've got some federal programs, and you've got different programs and things. And then, of course, you got paycheck protection that kept a lot of employers sending out paychecks. So all that, the net of all that is our occupancy and collections are really kind of where they've always been. Some properties are struggling a little more than others, but we're talking about a couple of points here. We're not talking about being 20 points off of last year or anything like that. So in that regard, I mean, look, we chose multifamily for the same reason a lot of people do, in that this is a fundamental need, and we learned that term essential service in 2020, right? And that became kind of a catchphrase. Well, housing is as essential as it gets, right? And so that's always been the investment thesis of a multifamily investor, is that people are going to need a place to live. And so that was tested and held up in 2020. And we paused our distributions, in March when all this came down. We said, we're going to conserve as much cash as possible. We usually send monthly or quarterly distributions out to our investors. We said, we don't know what's going to happen here. This is kind of unprecedented, and we're just going to pause distributions. But we actually caught up just about all of those by the end of the year, which is really nice. And so operations are doing well across the board. We're extremely fortunate and glad we chose this investment vehicle instead of any number of other businesses that are really being impacted, unfortunately.
Yeah, that's very great point. Can you kind of talk about maybe like one of your more favorite deals that you did recent, or something that you did in the past, and kind of talk about your business plan, what you did with it, just kind of give the listeners kind of a little example of what you guys been working on?
Sure. There was a deal we sold last year. So we sold it in 2020. It's kind of an interesting deal. You know what? We underwrote it. It worked out pretty well, enough to, put an offer and buy it. But when we were doing our physical inspection, our walkthroughs, We already had an LOI out, or we might have had this thing under contract already, but we're doing the walkthroughs and we see these units that we go in and see the unit, and it has a spiral staircase in the corner. We're going, oh, that's kind of interesting. Like, I don't think they built that with that little spiral staircase. And then we go see the unit right above it. And I remember my partner and I were looking around and we said, this is one unit, right? Is, with spiral staircase connected to them. And anyway, the light bulb went off that we were actually in two different units that somebody had connected at some point.
Wow.
And to make a bigger unit. And we said, man, we've got, how many of these are there? We did the math. Turns out there was like 24 units that we could convert. And so we turned a 106 unit property into a 130 unit property. Wow. Without pouring any more concrete. And it was actually like a pretty simple rehab, all things considered. And so, you talk about adding value, adding units. I mean, I may never get the chance to do that again, but that was a pretty cool way to add some value and literally turn this thing into a 130 unit property, which it was built as in the mid 70s, built that way. But somebody along the way had turned it into a 106 unit property. I think to get some Section 8 rents that were better. Obviously somebody spent some money to do that at some point. So we just said, hey, just turn it back. And so I think the moral of that story is, you always be on the lookout to add value, right? Any way you can. And as entrepreneurs, the winner is the one that, can seize that quickly and make it happen and think outside the box. So that was always a fun project, kind of a special place in my heart, in that it was kind of a one-off deal. I mean, frankly, sometimes these deals are actually boring, right? Which is what you want. Oh, we're going to buy this property. We're going to rename it. We're going to rebrand it. We're going to do this and that. We bought it at 92% occupied and we're going to keep it that way. I don't want to say there's not much to it, because certainly it's a lot of work, but it's it can be kind of boring. So when we had that project where we could actually add units to it, it was kind of a cool story. It was a fun project. Did well for investors. We sold that one last year. So that was a fun project. I think these days we tend to skew more towards bigger, cleaner properties. I mentioned the one we just bought was 256 units, mid 80s build, already in great shape. We're just going to kind of continue to do some internal improvements and interior renovations rather, and push NOI over a multiple year hold period. And that's not rocket science business model, right? It's just putting all the pieces together. So we've certainly had some fun projects. As I look back though, we've taken on really crazy projects early on, and then they tend to get bigger and cleaner as I've learned and grown the company.
And I always like to say, like, the boring is usually better, because like I said, it actually, gets what you wanted to do. So I'd rather take boring any day than some, crazy thing that you have to do this and that. And, as long as it works, you make investors happy. That's kind of the main point of it. So exactly. Really good story. Very cool. You had mentioned entrepreneurship. You have a very large entrepreneurship background. I was kind of reading your bio. You have all these different companies that you started. That's so cool. So I wanted to ask you about it. Can you kind of talk about, like, you had, I think you started an education company and a brokerage company. Can you kind of talk about kind of your entrepreneurial spirit and kind of like the passion of that you get from that?
Yeah, I mean, I like starting things, and it's a strength and a weakness, right? But as I've gone on through the years in business, you just kind of realize people fit into certain buckets. Some people are really good at different pieces. Some people are born salesmen, marketers, numbers folks, accounting. People kind of fall in these buckets. And I've just realized, at the end of my corporate career, I realized I wasn't happy despite having everything, right? Having flexible schedule and income and, work that I could dig my teeth into. I had it all. And it still wasn't happy, because I was kind of, I think, born or wired to be an entrepreneur. And what I like to do is I like to turn nothing into something. And it just bottom line. I mean, whether it's, starting a new company or turning a real estate project around, or, I'm a musician. So I think I just like to be creating things, right? I always like to be creating things. And so I think that's just my natural kind of inclination, is to be creating things. And then once I got the hang of, starting businesses, it's like, well, let's start, we see a need here, let's start another business. And so, it started out in real estate. And then over the years, I get lots of requests for coaching, and I was too busy to do that. But I'd been a part of coaching programs, and I kind of seen where some did well and some did poorly. And so a couple of years ago with a business partner, old friend of mine, old family friend, he had just exited from a software company, and I said, let's start this coaching company. And so that was a great way to do that. I could add value, use our track record and my kind of skills buying these properties, and he could run the operations. And so it's complementary too, right? And so now we've got coaching clients in there that's complementary to the rest of the business. And then the brokerage that we started was kind of complementary to that as well. And so, it's, I was talking with I've got some different peer groups and mentorship groups that I'm a part of, was talking with some of those guys that we're looking at our 2021 goals. And I said, these goals I think are doable. I think the biggest challenge is, you guys keep me in check. Don't let me start 5 or 10 more companies this year. Cause when I look at 2020, man, I start all kind of companies, and it's great. But, at some point, I think 2021 is the year of, let's just kind of keep growing what we already have. But I just love starting stuff, and I'm the kind of the first guy over the hill, right? And somebody's got to do that, right? Somebody's got to put their capital up, run with an idea, and build the team around it to execute it. And I've just kind of accepted that that's me a lot of the times.
Yeah, I like that. We kind of have similar things where I kind of have like 100 business cards. I'm like trying to create things and all that stuff, and it's fun, and I love doing it and love putting things together and seeing things work. And of course, don't work out the way you want it to, and then you try to get in different ways and things like that. So that's really cool to hear that. So awesome. Well, kind of learn a little bit more about your day. I know you have your multiple companies, of course, your base company with the investing. Can you kind of take us through like a typical work day for you? And do you have any special morning routines?
Yeah. So I think my goal is that I'm always working on stuff that is a good use of my skill set and that I'm enjoying doing. And now that's a standard that I clearly don't hit every day, right? I mean, some days are good, some days are bad, like anybody, anybody, right? Good days, bad days. But my target is that I'm using, if we talk about our dollar per hour activities, this is an exercise I started many years ago to say, hey, of all these 100 activities that I may be doing, let's put them in a spreadsheet, and then let's create a column. One column is the activity, right? It could be social media post or talking to an investor or, reviewing legal documents. I mean, you name it, right? 100 or 1,000 tasks, and then putting a complexity level next to it, complexity 1 to 10, and then dollar per hour 1 to 10, right? Is this a very high impact? Is it valuable, or is it not? And then really filtering that spreadsheet to focus on the more complex and the high dollar value tasks, and really getting it down to just a handful of tasks. So that's what I want to spend my time on. And today that it's really almost like relationships and people. I mean, it's taking care of my team and making sure my team has the resources they need to do an awesome job. And it's taking care of people that are in my network and growing my network. And that's kind of like where I try to spend most of my day, right? Talking to you, meeting you. That's awesome. I love it. It's valuable. Hopefully for your listeners, it's valuable for me. I love it. So that kind of stuff is awesome. And then building systems, right? So a day for me looks like wake up pretty early, 5 o'clock, have some coffee, head out to the office. I tend to go to the office most days unless I've got different stuff going on. And then just kind of dive into the projects and spend a work day. I mean, years ago when I left my corporate job, I had this big fantasy about being retired, right? And I had some passive income and I thought I made it, right? And that wore off like really quickly, right? I mean, I realized I actually function best leaving the house. I got to get away. I have a great house, great family, but you can't be there all day. I don't care how much money you have, right? So I actually like to go to work. I mean, it's of all the ways I could structure my life and my day, I like to go exercise my brain at work. And I think that makes everything else, I I can appreciate it. I can appreciate the downtime when I've really given it my all at work, right? And so there's kind of some satisfaction there. But I try to spend my workday doing things that are highly impactful, from, using my skill set, enjoyable to me, and then also high dollar per hour. And that's changed over time as I've grown a team, because I used to do everything myself. And, a lot of entrepreneurs or solopreneurs can understand this. I mean, everything, right? Producing content to investor conversations, building the business plan, putting the team together. I mean, the whole thing. And now it's, over the years, it's become obvious. It's my job now to find and keep awesome people. So that's a completely different skill set, right? Completely different skill set than being the guy that's like, I know I can code that website. Let me get in there and da-da-da-da-da. And it's almost dangerous that, that I can do some of that stuff, because it'd be real easy to spend all my time on it. And so I've had to kind of condition myself over the years to let, you can't, if you're going to grow, you got to let stuff go. And it becomes about, hey, how can I create an environment that's going to attract good people and have them want to be there? Because you can't force anybody to do anything in this world. I mean, you got to have people wanting to do their best in a role. And so that's kind of what I spend most of my day on now, is trying to figure out systems and to take care of the people that are on the team.
I really love that point too, that it's dangerous to know so much information, because you're going to want to go in there and do it, instead of, finding and creating the team so they can actually do it for you, and you can focus on the high level tasks. That's a great point. I like that a lot. Awesome. And then I know with your partners, your teammates, and your employees, any tools or resources, either physically or manually, that you guys use to kind of help you guys be more productive and manage your day better?
What I really like is Slack. It's a chat app, and we've basically completely eliminated internal email through using that app. So that's huge. I mean, I hate email, right? I mean, I want to eliminate and filter and get as few emails as I possibly can, because each one takes a little bit of brain power. It takes a little bit of computational cycles out of your day, and it's easy to get 150 emails and not be productive at all. So Slack has been a huge one. Some of the other tools we like, Google Docs, that everything lives there. The Gmail, the Google suite of products there. The CRM, which I think is kind of irrelevant which one you're using, but the CRM we use is Insightly, and I've got it, I've kind of got a background in setting these things up. So I've got ours kind of customized and workflows. And I mean, anything you can automate with software is a good thing in terms of creating repeatable results. So there's a lot of tech tools there that we like. I think my favorite new one though is Slack. I mean, it just so many examples, but one of them is, we've got some coaching clients that are under contract on a property. Well, this is their first project, and I mean, there's a lot of moving parts. Stuff's time sensitive, so we just create a Slack channel. The broker, myself, and the team buying the property are all in there, and we can just communicate rapid fire. Everybody can see it. Nobody's setting up, a bunch of calls or emails. And so that's been great. That's been a great tool for us. I love it.
I like that a lot. Awesome. With all your success and kind of all your ambitions, all the things, of course, I know you're big into charity and things like that. Can you kind of tell us what you're grateful for?
So many things, everything, right? Being grateful to be born in this century or this time. Be grateful to be born in America, right? I mean, just born in America. Take born in America by itself, right? Born in America. I was born in 1978, right? Born in America in the last 50 years. Holy smokes, right? I mean, we could have been born 300 years ago, and it's a different world. We could have been born in another country, have completely different opportunities, right? Absolutely. And I'm blown away by, I've had, a lot of folks that have immigrated to America, first generation, that have done really well. And I look at those guys and go, man, I mean, they came over on a boat with nothing and have made something. And I didn't come up with a lot of resources, but better than a lot of the world. That's for sure. Right. So I'm grateful for being born in America, number one. And then beyond that, I mean, I am blessed beyond belief, wife, family, the business. I mean, I have my fair share of challenges like anything. But just incredibly grateful across the board. And so I think, something that helps me keep that in perspective is to try to give in meaningful ways. Right. And sometimes that's time or expertise, but that's why I started our foundation last year. Is I want to intentionally give away money and get better at that. Right. Because I found starting the foundation that there's a lot of nuance to it. I think I'm going to be practicing that hopefully for the next 50 years, how to give away money in effective ways. And that is, I think, a way to help me feel really, to help my perspective. Because the challenge that I think that I've encountered, and I think a lot of people that have achieved something they set out to do have encountered, is this concept of hedonic adaptation, right? And it's that anything that happens to you, you pretty much normalize it very quickly, right? It's been said that if you lose your eyesight or you win the lottery, 3 months later, you're back to normal. You lose your eyesight, that's a big negative, but you're going to adapt to it. Same thing with, winning the lottery, you're going to adapt to it. And so it's been kind of a challenge for me. It's like, I'm checking out all this bucket list items for my life that the business allowed me to do. And then you kind of immediately adapt to it, which is interesting, right? So back to the gratitude question, I think trying to find ways to meaningfully give, money is one, but kind of time and resources, or to help other people get, to kind of the next level of their life, has been really impactful for me. And, you try to stay in that gratitude frame of mind as much as possible, because that's where you want to live. And so it's trying to figure out tricks to stay in that gratitude mind frame.
Absolutely. Yeah. Very well said. I really appreciate you sharing that. And also, so we'll make sure to have all your information in the show notes. We'll get this out to our listeners so they can get in contact with you. But is there any contact information you can share with us online so people can hear?
Yeah, the easiest way is the main website. It's DJE Texas, Delta Juliet Echo Texas.com. We got content there, and then definitely a way to reach out right there on the website. And so that's, we've got all kind of different stuff out there, but I usually just share the website. It's probably the easiest.
Awesome. Devin, it was a pleasure to speak with you. Loving hearing about your investing in Texas, entrepreneurship, and, kind of your passions and giving back and things like that. And just kind of your whole thoughts on things, and kind of give a lot of perspective to me as well as the listeners. I really appreciate you taking the time. Have a great and successful 2021. All the best to you and the family, and look forward to connecting with you again soon.
Dwayne, thanks so much. I really enjoyed it.
All right. Take care, my friend. Hey there, this is Dwaine Clarke, your host of the Wealth Through Real Estate Investing Show. I want to thank you again for tuning in, and hope you're enjoying this valuable content. While I got you for a quick minute, I wanted to send you an invitation to join our growing investor community. It's called the Passive Investors Club. It's a group of like-minded individuals like you who are seeking financial freedom and to build true wealth through passive investing in commercial real estate. We take a totally different approach to investing that is opposite, that is pushed by the financial advisors and what we see in the mainstream media. We like to invest in real assets that we can touch and understand, and that are not subject to the wild swings of the financial markets. We don't want to be part of the herd who pursues the traditional route, leaving our financial future to Wall Street. So if you're interested in joining our group and to sharing resources and opportunities, then go to passiveinvestorsclub.com/join. Joining the club is completely free, and there's no obligation. And all our members receive our free Passive Investors course, along with tons of resources and content. So again, passiveinvestorsclub.com/join.